Hello, everybody. Welcome to the Juan Galt show. Today we have a very special guest, Professor Peter Saint Onge. He's an economist at Heritage, fellow at Mises, former MBA professor, former bartender, pleb, and he writes articles and makes videos at peterstonge.com. He's pretty big on Twitter. And we had a really good conversation. We talked about the BRICS gold standard and what might happen there. See if the East is going to go back onto the gold standard. Very interesting possibility that's developing. It would be definitely world changing. We discuss some of the consequences and issues around it. We talk about American politics a bit, in particular the impact and mistakes of the Libertarian Party. He argues that it shouldn't exist at all, and it's a very interesting discussion. Since libertarianism has kind of affected American culture to a large degree, but politically speaking, it's kind of a counter-indicator. So that's very interesting. And we talk about El Salvador and the challenges of Bitcoin adoption in El Salvador and whether that'll change the bull market or not. And yeah, overall, I thought it was a really good conversation. Really enjoyed his company, and I think you will as well. So without further ado, Professor Peter Saint Onge. Peter, how are you doing today?
How you guys doing?
Very, very good. Very interesting day in the news. I've been seeing you've been tweeting out a lot today in terms of the markets. You had a video today on the drop in manufacturing, which is fascinating. So maybe we can start there. But how are you doing? Is there anything in particular you want to get into before we go into the news?
Oh boy, there is so much going on, for better or for worse. The hits keep coming, but yeah, tons going on. Of course, we've got the BRICS summit coming up soon here. We've got lots going on that affects Bitcoin, that affects the dollar. You know, today we had new jobs numbers that came out. The headline looked good. I mean, it looked decent on the surface. It was just a little bit of a miss. But once you dig into the numbers, it was just ugly in there. We've basically got full-time jobs that are vanishing, rate of maybe 100 or 200,000 a month. Those are being replaced by part-time gigs. That's part-time for, quote, economic reasons, meaning not part-time work that people chose, but part-time work that people are forced into because companies, don't want to hire anymore. Companies are concerned about the recession that's coming. The U.S. economy is becoming what used to be called a McJobs economy, but it's basically just DoorDash at this point. By the way, they've got a new rule coming out later this year. It's not finalized yet. The federal government is a behemoth that moves slow. But they've got a new rule coming out that's going to crack down on independent contractors, things like DoorDash, Uber, even potentially, kind of mom and pops doing stuff on the internet like us. So there's a lot of bad stuff coming on the horizon, and there's not much that's good in the near term. I always say whenever we talk about the economy that, the sort of day-to-day news is depressing, but of course you want to keep in mind that the people themselves are always building, right? We build, the government destroys, but, the past 50 years anyway, the government has done nothing but destroy, but the people build. And so, that's the reason things aren't quite so bad. So just kind of to remind people that, there is this sort of God in the machine where, the people do try their best to improve things, to up their skills, to start businesses, things like that. So I don't know that things are necessarily going to collapse or we're going to eat cat food, but definitely the headlines, the kinds of numbers that government are reporting recently are looking pretty dire.
Yeah, I mean, the more I look at macro and the local economies and the kind of policies that the powers that be are pushing, the more I think they're literally trying to destroy the economy. It doesn't seem like they really care to enable a good environment for prosperity, right? And
Yeah, I had an article on that a couple months ago on the Substack that, a lot of that is fiat money, right? So for thousands of years in history, there was this symbiosis between government and the people, or the economy rather, where the government wanted prosperity because that would mean more tax revenue. And so even though the government's a parasite, at least, they take some care in trying to ensure that there's jobs and that businesses are doing well enough that they can actually pay taxes. And of course, fiat breaks that. And we saw that during the COVID lockdowns where, governments worldwide seem to not have the slightest care about crashing the economy because they didn't need the tax revenue, right? You can kind of imagine an alternative universe without fiat money where COVID would hit and you'd have some junior bureaucrat who would show up, at the emergency meeting and he would say, hey, I got an idea. Let's close down half the economy. Yes, we'll lose half of tax revenue, but that's okay because we can just lay off a bunch of government workers. Right, so he would have been laughed out of the room. That would have been the end of that guy's career. And of course, that didn't happen. What happened instead is they said, yeah, shut anything down you want because we'll print it. And that's exactly what happened really all across the world, but especially in the West. And, that it's like swinging a pendulum. Every swing of it keeps causing this harm. So, now we're dealing with the inflation that's coming out of that. Then you've got the interest rates to fight the inflation. Then you got the banks crashing. I mean, it's just one after the next. These dominoes are falling, all from the original sin that they went with these bonkers lockdowns, and they could only do that because of fiat money.
yeah, it's really incredible, and thank God that economics is more of a set of laws in a sense than something a set of natural laws than they are human-made laws. So we are seeing credit crisis, bond crisis in the U.S. We're seeing international players at least pretend to make moves. There is like steps that seem to be being taken to diversify from the U.S. dollar hegemony. And while that's not, it's not necessarily clear how good that's going to be for Americans. I think it's going to be rough, right? It's going to be it's going to be pretty bad for a lot of Latin Americans too, I think, and a lot of Western countries in general. The East certainly seems to be diversifying. And so, maybe we can get into a little bit of this BRICS story. Can you maybe introduce us to what do you see in this BRICS alliance in general? And then maybe we can zoom into some of the latest policies and announcements.
Yeah, so it's interesting. Kind of the big picture here is that China wants to divorce itself from the U.S. and set itself as an alternative hegemon and, sort of split the world into like two competing economic blocks. And normally you would think it doesn't have a snowball's chance because the U.S. is so large and dominant. It's got all the major countries on its side. But in fact, China is making a lot of progress right now. So they've got something like 20 or 30 countries that are applying to join their BRICS anti-dollar bloc. And that includes countries like Saudi Arabia or Mexico, right? So these were traditionally seen as, among the most solid U.S. allies. Specifically, Saudi Arabia was the linchpin of the petrodollar arrangement. Basically, the U.S. acts as unpaid mercenary for the world, and in exchange, they use our script. And so to see countries like that moving over, already the BRICS group is close to half of world population. It's more than half of the resources, the raw resource, and that's largely because the West is taking itself out with this, with these green policies. The West is essentially outsourcing all of its dirty work to these other countries. And of course, that's not doing anything for the world environment. But what it is doing is, handing a huge amount of economic leverage over to these countries. And these countries, there's sort of a correlation between countries that don't buy the green energy thing and countries that don't like the U.S. And so the U.S. is creating this alternative bloc where, the global manufacturing capacity, the raw materials, everything that you need to really make the economy run is located on China's side of the table, right? And meanwhile, the U.S. it is run by such idiots at this point. There was a line from Larry Summers. He was relaying a conversation he had with an African diplomat, and the diplomat said that when China comes to visit, they bring a checkbook, and when the U.S. comes to visit, they bring a lecture. Okay, so the U.S. parachutes in. They give countries a hard time over their union policy, over their environmental policy, over their LGBT policy. So the U.S. comes in with demands. Meanwhile, China parachutes in, and China has a gigantic checkbook. So they say, what do you want? It's almost like a menu at a takeout restaurant, right? They say, what do you want? You want an airport? You want a railroad? You want 10,000 condominiums? You tell me, what do you want? And in return, what China wants is access to raw materials. Now, in a lot of these countries, like in Africa specifically, you've got these fantastic raw materials that are not being used because the countries are dysfunctional, right? So like Angola is sitting on a ton of oil, but until very recently, until China came in and helped them exploit that, it was just sitting there. So it wasn't doing anybody any good. So fundamentally, China gets cheap materials. These countries get to actually sell the materials. They weren't selling it for anything before. All right. And China says to them, I don't care what you do domestically. Okay. I don't care about the human rights thing. I don't care about environment. I don't care about any of that. So for a lot of these countries, that's quite appealing, right? They can either deal with China, who rains money on them and buys their stuff with no questions asked, or they can deal with the U.S., where you never know when you're going to get on their bad side. And, some activist back in the U.S. is going to have issues because you don't have enough windmills or solar panels, and then you're going to get sanctions on you. So the U.S. has already threatened that with Uganda based on their LGBT laws. Uganda, like Africa, is very socially conservative. The vast majority of the world at this point is extremely socially conservative. And so, the U.S. is kind of pushing them somewhere where they cannot go, while China is telling them, I love you just the way you are, and here's a fat check. So it is not surprising that China is winning this battle, even though on paper, obviously you would expect the U.S. has a lot more advantages.
That's just amazing. It's so sad to see such poor leadership in the West. I mean, I see it everywhere. I think that one of the few kind of shining examples around is basically El Salvador and Bukele, in my opinion. And and people criticize him as being a strong man and this and that. And I mean, listen, yeah, he's definitely strong, and he's definitely being hard on crime. But like where I'm at, I'm seeing crime rates go up, and I'm sure they're going up in the United States and in Canada and all over Latin America. And people are like, literally, my cab driver last night was telling me, listen, crime is going up, and we need a strong man. And he literally said, we need somebody like Bukele because this is ridiculous. We have a socialist president here in Colombia, Mr. Petro, and he doesn't seem to give a damn about the people. He's just sort of, handing out favors to his guerrilla friends, and it's making people kind of uneasy.
People want order. People want to live in a country where old ladies can walk around at night, where kids can go to the park. People want order, and right now the Western democracies are largely failing. We saw this in France. Of course, U.S. cities have been collapsing. We've had almost nonstop riots for about a year there back in 2020. Protests, what was it? Mostly fiery protests. The West is failing at the basics of governance. And now it can be fixed. There are democracies in the world that function. Places like Japan. I was living in Taiwan for about 5 years. Taiwan is a democracy, but it works very, very well. I think what happened in the West for the most part is that the governing mechanics were captured by special interests. So you have government unions, you have bureaucrats that essentially rule themselves. So in the U.S., for example, when Trump came in, he ran up against a lot of opposition where he couldn't get anything done, right? The government, it was like him versus the government. And of course, in theory, that's not how democracy is supposed to work, right? The theory on democracy is that if the people elect a particular president, then the rest of the government has to do what he says because he's speaking for the people. So I think in many ways, the West has been crucified on this sort of, whether you call it a deep state or an administrative state, where the people in many ways don't speak. They don't have any influence. And so when you get into that situation, then the government pretty much does what it wants. Rather than, let's say, arresting criminals, it will spend the money on pensions or on, some kind of social politicized outreach to appeal to, whatever politicians is raising their budget. The government sort of wanders off and does its own things. And of course, governments in general, they don't have strong feedback mechanisms. Like, it's not like a company where you can just fire people who don't perform. There's really nobody in the government bureaucracy who's watching over, sort of the quality of services. And so once the people drop out like that, then, they really do collapse into third world levels. And, you see this, if you take a city like San Francisco, the per capita income in San Francisco is astounding. It's astoundingly high. It is one of the richest cities on earth. There is so much money in San Francisco. And, the amount of money the city government collects is astounding. And yet, they can't provide basic public safety. Criminals are not taken off the street. The city really looks like a third world country. You can understand if it's some impoverished country that simply doesn't have the means to take care of its city. But at this point in the West, it is so pathetic, their performance, given what their budgets are and how much resources they have. I don't think it's quite intentional. I just think that the government mechanism has been captured by those special interests who really don't much care about the people.
Yeah, it sure looks that way. I mean, it seems like there's this elite corporate alliance with deep state powers, and that whatever accountability the public had over the government is very thin and very fickle in the United States. And I wonder, I don't, it's hard to talk about all the countries at once because obviously it's very complex, but yeah, that does seem to be the trend. There's a lot of different ways we could take the conversation from here. I think I'm curious about a chart I tweeted out, which kind of counters, let's say, the recession narrative a little bit. At least in the short to medium term, it's a chart of the stock market contrasted to the yield curve of the 2-year and the 10-year yield, showing that we can go into these kind of like collapses of the yield curve while the stock market continues to go up. And the stock market is, not necessarily a great reflection of jobs and sort of the everyday income, but at least the market's growing and companies are, pumping, right? And people have a lot of invested in the stock market.
Sure.
Do you have any thoughts on that? Because it seems like that chart, and I just tweeted it out. Hopefully we can put it in the chat in the nest. But the scary part comes when the yield inverts. And I'm not exactly clear on why the yield inverts. So maybe we can expand on that chart a little bit and see, just to see if we can catch the events before they come,
Sure. So yield curve inversion means that investors expect interest rates to come down. Okay, and normally that happens when the central bank expects a recession to come. So a yield curve inverting means that the market now widely expects a recession. Typically is about a 12 to 18 month delay on that, because the yield curve is sort of one of the first signals that a recession is coming. But the actual economic numbers that make up a recession, so example, companies laying off workers, cutting prices, cutting production, all those things take longer. So that's what a yield curve is. And it first inverted, I think at this point, more than 12 months ago. So, we should be due, based on the yield curve, for a pretty serious recession. And one of the biggest, I'm going to say, mysteries in investing has been why the market has been holding up so well. I've actually got a video shot on this. But, last year, the market was looking like you would typically expect in a recession. So the S&P was down about a third. The NASDAQ was down about a quarter. Those are kind of typical numbers that you would expect, typical market reactions to an incoming recession. And then starting in December, everything flipped. And the market turned back to acting as if it's a boom. So specifically, one of the indicators that you look at for an economic boom is growth assets outperforming value assets. Okay, so growth assets are things like .coms or AI or crypto. Those were doing better, and so that at the time it got a lot of people scratching their heads. And in fact, if we look at it today, the market is overvalued by about 2x relative to historic values. So that's on the Shiller PE. On the Buffett indicator, the market is currently more expensive than about 90% of the time. When I say expensive, I mean how much you have to pay for $1 of profits on a company, which is kind of the standard measure. So this is weird, to be 2x normal and to be above 90%. Well, most of the time the market or the economy is not in a recession, right? So we're, by all accounts, even the Fed, the analysts, the bankers, the yield curve, the Fed, everybody believes that we're going to have a recession. The only debate is whether it's going to be shallow or deep. And yet the market is higher than it is 90% of the time, meaning that it's roughly above 100% of the time when there's a recession incoming. So that's been one of the real mysteries. And I think what's happening here is that the pandemic itself, it disturbed so many things that there are a lot of hangovers. The two biggest hangovers are, number one, savings, right? So people received trillions of dollars and generally they just saved it. The stimulus checks at the time in the U.S. anyway were billed as helping people who were starving, but in fact, if you actually look what happened to stimulus checks, they were spent on luxuries, generally for the poor, and then for the middle and upper class, they were just saved away. So there's trillions of dollars in spending left over, so people can still spend like they could in a boom, even if we're coming into recession. And then, the other thing is that there was pent-up demand from the supply chains being stuck. So a lot of people, instead of buying a new car, right, cars were extremely expensive for a while there. It was hard, at least in the U.S., it was hard to get a washing machine or a dishwasher or something. It was almost impossible to get those. You had to pay like 50 or 100% above average. So a lot of people stuck with old stuff and just kind of made do. And then, once those supply chains eased up now you've got this pent-up demand, whether it's building houses, you can get raw materials for the house, you can get windows, you can get refrigerators, or whether it's buying cars, right? Houses and cars are sort of two of the biggest pieces of a typical recession. So anyway, you put those together, the assets and it's called durable goods, and those are muddying the numbers. So, and we've got a third factor, which is a lot of people have dropped out of the workforce. Again, in the U.S., government benefits were very generous during the lockdowns. I think because sort of the message went out that the goal here is to convince people to accept the lockdowns. It doesn't really matter how much it costs. So you put those together, and these sort of standard economic indicators of a recession, which are jobs, consumer spending, and consumer durables, those are all holding up very well. But I think it's because they're running off fumes left over from the lockdowns, that those were disruptive, and it takes a while for those to work through. So I think, given that the market is confused, it's sort of looking at naive correlations of how these numbers work. In other words, they're just tracing out, well, if consumer durables are rising, that never happens in a recession, so we must not be in a recession. Whereas I think that if they back up and understood more theory, every school of economics, even Keynesians, know that raising interest rates that dramatically is going to set off a recession. But very few people in finance, very few people on Wall Street understand anything about economics. Even Ray Dalio, who's one of the best in terms of theory, and he apparently has never come across Austrian economics. So I think fundamentally that's that disconnect where the market is still held up, but the economy is getting worse and worse. I think that resolves in the direction of the economy ultimately, and what people are currently calling a rolling recession, meaning some numbers good, some numbers bad. That ultimately goes off the edge, and at that point, I think that there's going to be probably a pretty big correction on the market. Now, having said, one of John Maynard Keynes's only contributions to humanity was the line that the market can stay irrational longer than you can stay solvent. So it would not be shocking if the market continued going up from here. But personally, I think it's kind of collecting dimes in front of steamrollers to get into the market at this point.
Yeah, and one of the very interesting variables that's kind of different here, or at least appears different, is this idea that we are in a parabolic stage of technological innovation where technology is moving so fast that despite world governments and their collusion with corporations and their best attempts at stealing as much as they can, nevertheless technological innovation is enhancing our productivity beyond that because it's going parabolic. So obviously this brings in the topic of AI, and we're talking about jobs, we're talking about manufacturing going down, but in particular in terms of jobs, how do you see this particular technology? Because one of the components of the stock market continuing to go up is actually most of these companies are deep into AI, and we're in the early stages of a full-on AI tech bubble. So we have Microsoft, Nvidia, well, Tesla obviously is one of the big ones, and Tesla's had some growth this quarter. I think it's like up like 100 and something percent this year. So most of the S&P growth is AI FOMO, but there's also the concerns that AI is actually destroying jobs because of its nature. So maybe you can. I'm curious what your thoughts are on that tech.
Yeah, the whole tech going parabolic, so this time is different thing. They roll that out every single boom. Uh, every time there's a boom in the economy, they'll reach out for whatever is local. So it's plastics, or it's railroads, or it's electricity, or it's the internet. Uh, Last time in 2008, it was China. Okay, every single time they reach for something where they say, "My gosh, this time is different. It's going to be up forever." So I'm skeptical of the "this time is different" arguments. Now, having said, I agree that AI it's a very significant technology. It's probably up there with electricity or the internet in terms of what it does to the economy. I think the biggest concern there, so historically, when you have really disruptive technologies, what it ends up doing is making everybody a lot richer. Like if you take agricultural mechanization in the 19th century, all right, so in the early part of the 1800s, something like 90% of Americans worked as agricultural laborers. All right, and then they were all replaced with machines by the end of the century. So of course they all starved to death, right? And no, because we got a heck of a lot richer. And a big part of getting richer was the agricultural machinery. So in a well-functioning economy, you don't fear new technology, because what it does is makes you richer, and then richer people want more stuff. They want more physical stuff, they want more services. You've got lifestyle coaches and hairdressers and personal trainers. You have all of these. You have nannies, you have personal chefs. You just have this endless amount. Like if you just sort of ask yourself, if they didn't cost anything, okay, or if you could pay, I don't know, whatever. Anyway, if they didn't cost anything, how many people would you hire? I don't know, probably 5. You'd have a butler, you'd have a maid, you'd have somebody to entertain the kids, somebody to keep grandma company. Okay, there's an endless demand for labor. And so historically, when you've had these really disruptive technologies, it makes everybody richer. The metaphor I like is an escalator. Okay, so yes, everybody steps down one step in their jobs. Okay, so their old, good job at the factory is gone, and now they have to work, whatever, as a bartender. Okay, and a bartender makes less money. So yes, everybody steps one down, but the thing is, the technology itself is raising wealth so high that bartender pays a lot more than it used to, right? So for example, a butler in Britain makes a heck of a lot more than a butler in India. Okay, and that's not because butlers in Britain are necessarily better at their jobs. It's because the overall level of wealth in the society. So I'd say normally you don't have to worry about it. And that's the logic of a lot of the economists who say, they sort of dismiss concerns about AI. I think what the problem is, going back to the dysfunction, specifically in Western democracies, they have made it so difficult to start a business that, a lot of the small businesses we have are legacy. They're left over from the past. Maybe your father did it, or, maybe you yourself have been, whatever, running a restaurant for 20 years. And so you're already there. But the creation of new businesses or new jobs, there's so many barriers to that now. They're regulatory, they're tax. You've got mandates. In the U.S., the number of federal regulations has gone up about tenfold in the past 30 years. I mean, it's just every single January 1st, you never, they're going to tell you have to replace the stove in your pizza shop so that it's greener, and that's going to cost you $50,000, and nobody's going to give you money for that. And then you have to charge customers so much that they won't come anymore. It's just this endless war on business, especially small business. And my concern is that in that context, it's sort of like you have a river of jobs, right? So the old jobs go away, the new jobs come in as technology advances. But in this case, government can become like a dam blocking off that river. And that means that the new jobs don't come, it dries up. So that is my concern. And, I think AI is probably going to be very disruptive on jobs. Normally, we would say bring it because that means we'd be getting a lot richer. But in this case, I am a bit worried about it.
Yeah, and one of the very interesting dynamics with AI is that people were concerned that it was going to get rid of, let's say, blue collar jobs, right? But it turns out that the jobs that it seems to be getting rid of, it's actually white collar jobs, right? So, instead of hiring a lawyer to get an average opinion, hopefully, right, from a lawyer, you could just go to ChatGPT, get the average opinion, draft a contract, and then in the final part of the process where you get somebody, you pay a lawyer, 10% of what you would have paid them otherwise, and they'll verify, polish, update, and do the work that's needed. So a lot of white collar jobs are getting probably, it's hard. I don't want to say destroyed because this is fantastic, especially, it's fantastic in the sense that it's dropping the cost of, access to sophisticated, business. Potentially it's dropping it a lot, right? So, on that line of thinking, there's this argument that AI is actually going to be very good for small businesses, assuming, again, like the powers that be don't try to steal everything. But, as a small business, if I can hire 2 or 3 software robots to do most of my accounting, most of my legal, and most of my even like marketing, in a year, let's say, or maybe going forward, that seems pretty good from the small business perspective. Maybe you have some thoughts on that.
Oh, yeah, for sure. That's that first scenario I was talking about where it makes everybody richer. So, concretely, even if you have a small firm, you are able to provide a given service a lot cheaper, let's say at 10 cents on the dollar, and you're going to book some of that in profit, but most of it is going to be competed away, and the end result is that the customer is now paying, let's say, 11 cents on the dollar. So the customer just got 9x richer. So for sure. And I mean, that's basically the story of technology throughout the ages. If you consider, I don't know, Uganda versus Japan. So Uganda has a lot less automation than Japan, right? And yet Uganda is a lot poorer. Why? Because machines are cheaper than humans. Once you have the opportunity to accumulate capital, once it makes sense to do it, then very rapidly the machines outcompete the humans, and then everybody gets richer. And indeed, a country like Japan, or I think Hong Kong is up to 97% services, something like that. Japan is about 90. Most of the West is about 90. So that process of automation making things cheaper, that's largely happened with goods so far, or anyway, it's happened with goods more than with data and sort of abstract services. But now, right, AI is probably going to bring that over to those abstract services. Of course, that would just be an acceleration of what's already been happening with the internet, right? So most of what the internet made cheap was not physical goods. There was a certain amount of, sort of streamlining supply chains and such, but most of the impact on the internet has been making services cheap. And some of that customers get in the form of cheaper stuff. So for example, with the lawyer example you gave earlier, you can currently, you can just look up on Quora or something, and lawyers have often given answers to questions you want. You can get them effectively for free. And then another part of what customers get is just the quantity of stuff, right? So, when I was a kid, if you wanted to watch a TV show, you had three TV channels, and you had to pray that one of them was, somewhat interesting to watch. Now, of course, you can go to YouTube, and there's more content. There's more content that you love produced per day than you could possibly ever watch, and all of it is free. So, in a sense, I think that a lot of what we're going to see from AI is just stuff that we've already seen from the internet. And then the key question there is that if governments can stay out of the way, not just stay out of the way mucking with AI itself, but stay out of the way of the rest of the economy, then I think we get a very bright future. Just talking about the economic aspect of AI. If, on the other hand, governments continue sort of laying burdens on providers, then I think AI could make things a lot worse.
Right. Yeah, very, very interesting times. Certainly very interesting times. Let's talk a little bit about politics in the U.S. You work with Heritage and Mises. I believe, I'm honestly not very clear on what Heritage and the Mises Institute do. I mean, I guess they're economic sort of think tanks of some sort. Maybe you can tell us a little bit about them, describe what you do with them, and then we could probably move into a little bit of like American politics because it should be related.
Sure. So Heritage Foundation is the largest conservative think tank in America. It's actually one of the largest think tanks in the world, and certainly the largest conservative think tank in the world. Economically, conservatives and libertarians tend to see things the same way. I've always identified as a libertarian, but Heritage, from an economics perspective, it's very libertarian. So free markets, power to the people, shrink government in size and scope as much as possible. Of course, hard money. So Heritage is pro Bitcoin, not crypto, Bitcoin. Also pro gold. Mises was founded really to honor the economic philosophy of Ludwig von Mises. So that's Austrian economics. And, I'd say today, maybe the most influential economist there, certainly among the young people at Mises, is probably Rothbard. He's certainly my favorite economist. And Mises has also been pro-Bitcoin, pro-gold, of course. And I'd say at least indifferent towards crypto. I think in general, both libertarian and conservative movements have not been that excited about non-Bitcoin crypto. More or less view it as like a bunch of day traders, like whatever, it's fine, but it's not really that exciting. On the other hand, Bitcoin, it's got a lot of the potential that gold has always had. I think the feeling is that Bitcoin could really change the world and make it a lot better.
Yeah, definitely, and I mean, obviously, there's very strong alignment there. I've been a libertarian for a long time. I've been a libertarian since I was 18. That was a good half. It's a long time ago now, and so I've heard of these names, and I've seen. Let's say I've been surrounded by libertarians for most of my life now, and however, I was always surprised to see, let's say, that my peers would pay lip service to Bitcoin, but not really. When I looked around after a bull market, it turns out most of them hadn't really bought into it. And I wonder if you've had a similar experience. Yes, there's lip service and there's like a vocal appreciation, but it seems to me like most libertarians should be absolutely loaded with Bitcoin at this point. They should be all rich and powerful. And unfortunately, what I see in American politics is, libertarians have cultural power. They have they have a beachhead in the mimetic realm. We are living in libertarian memes in many ways, as far as I can tell. But politically speaking, from the Libertarian Party to, let's say, the actions of government, it doesn't seem like libertarians have a stronghold there. So maybe you can. I'm curious. Where have we gone wrong? What are libertarians doing wrong that keeps us from actually helping to steer this Leviathan? Is that even possible?
Yeah, I think the biggest tactical mistake, this is my personal opinion, maybe it's controversial, but I think the biggest tactical mistakes that American libertarians have made is the Libertarian Party. The US system is extremely difficult for a third party to break into, but it is also extremely easy for a dedicated group of partisans to take over either of the main political parties. Right. So the progressives took over the Democrat Party very easily over the past 15 years. That's why the Democrat Party went insane. The Republican Party was very easy for Trump. Really, that was the Tea Party movement. So, I mean, it was very easy for them to take over. The political parties in the US have almost no immune system. I think it's surprising to people how easy they are to take over. And so I think if the libertarians would quit with the Libertarian Party, I almost wonder if some billionaire is funding it to sort of lock the libertarians in carbonite like Han Solo in Star Wars, just lock them up so they don't hurt anything and keep them out of the conversation. So what I'd much prefer is, hold a big farewell party for the Libertarian Party, close that stupid thing down, and the left libertarians can go infiltrate the Democrat Party, the right libertarians can go infiltrate the Republicans, whatever they like, take over one of the existing parties. The Democrat Party is by far the strongest in the U.S. So, if you're starting from scratch, you should definitely take over the Democrat Party if anybody's listening who's interested in taking over a political party. But the point is, I think the tactical errors in the U.S., in a European system, sure, you go with the Libertarian Party approach. You have your pure platform. I think it's the Free Democrats in Germany who basically go this route. You get 8-10% of the vote, and then you try to become a kingmaker. Right. Okay. Fine for a European context. In the U.S. context, it's a dumb idea. You are completely you're actually handicapping yourself because you are taking your people out of the conversation. When you look at opinion polls, something like 20 or 25% of Americans identify as libertarian. That is comparable to the percent of Americans who identify as progressive and conservative. Okay. Like libertarians have this self-image that there's only 3% of us and nobody else understands. That is not true. I think the Libertarian Party strategy has been completely self-defeating. Moreover, if you dig into opinion polls, most Democrat voters, they call themselves Democrats or progressives or something, or liberals or something, but they actually, when you dig into their beliefs, they are libertarian. They want the government to stay out of people's lives, whether it's abortion or whatever. The American people are, I think, culturally libertarian. I think that the Libertarian Party has been a catastrophic marketing approach. So I am hopeful. There are people trying to do this, but yeah, I think that's what largely accounts for it. As for Bitcoin, you'd mentioned earlier why so many libertarians are resistant. I think a lot of that is simply age. If you look at opinions on Bitcoin, unfortunately, it massively correlates with age. Young people are more open to new ideas. I think for somebody, the sort of typical, let's say, 60-year-old who might be open to Bitcoin is probably a gold bug. They probably have been their whole life. And it's hard for them to understand how this sort of geeky toy that, it's not based on anything, it's somewhere in the clouds. It's hard for them to trust it. And so, I don't know. It's sort of a popular meme within Bitcoin to blame that on Bitcoin, like to say that, Bitcoin itself is hard to understand. I actually don't think it is. I mean, credit cards are also very hard to understand. Most people who use credit cards do not understand how they work. Like if you ask somebody who's using a credit card at the grocery store to kind of sketch you out and describe to you how credit cards work, they have no idea. Okay, they just use it because everybody else uses it and everybody else tells them, yeah, you use it, and then they send you a bill at the end of the month and you pay the bill. That's all they need to know. Okay, so why don't people approach Bitcoin with that same mind frame? I think that's simply because they don't see other people using it, right? They see other people using credit cards. They don't see other people using Bitcoin. So I think that what would, part of, I guess, the good things to come for Bitcoin are that as, the longer Bitcoin exists, right? You get to a point where 30, 40-year-olds are now familiar with it. And then, that drives usage, and then other people see the usage and they take it up. But I think structurally, the single biggest handicap, I think, for Bitcoin has just been that it's so hard to use for regular purchases. Lightning Network, I think, was a big step, but I think it's also somewhat baroque. It's not as easy as using a credit card. And until we get to that kind of UX, whether it's based on Lightning Network or some other technology, I think that we're not going to see massive uptake in Bitcoin.
Right. Ooh, that's really interesting. So I have to ask you about Lightning. I mean, obviously, one of the big issues with Bitcoin adoption is the price volatility. From a very normie perspective, without understanding, let's say, or caring about self-custody and the transparency of the system and understanding the depths of it, which most of the people here listening probably have a good sense of. Most people look at Bitcoin and they say, wow, it went up. Oh my God, it went down, right? And that creates an anxiety for them. And I think they don't have the time, very often to dig deep and understand why it's worth it to struggle through the volatility. And so this question of the crypto dollar or the tether, the CBD, the USDC type, frankly, CBDC type digital dollars. It's a constant question that comes up, and it seems like one of the big applications, one of the killer apps, so to speak, of Bitcoin has actually been the invention of Tether. Tether is very, very popular, widely used internationally. The Tether Corporation printed more profits, I believe, this year or in Q1 than BlackRock, which, we were just talking earlier, is basically, the fifth pillar of the U.S. government. And so it's very impressive. It's very useful. Tether is very useful. It's not perfect. It's certainly centralized. It's certainly trusted, and it's certainly surveilled. But it also is digital, and it solves a lot of the speed and divisibility issues of fiat, especially paper fiat. The only question there is what network to use to move it. So there's this internal debate within Bitcoin about whether or not we should put something like the US dollar on top of Lightning. Is it good for Bitcoin? Is it bad for Bitcoin? Is it gonna influence the consensus? Are we selling out? Is it brilliant strategy? As Saylor points out, what do you think on that?
Yeah, I mean, I don't think it is that day-to-day payments are important enough to kind of fiddle with the fundamental architecture of Bitcoin. You're living in Colombia, so you're aware that rich people in Colombia don't hold that many pesos; they hold dollars, right? And they use pesos for month-to-month transactions, but the vast majority of their money is going to be in dollars. And I think that's kind of what Bitcoin has become, where so you don't have, let's say, a Bitcoin credit card in wide use, where the underlying rails are Bitcoin, but you're spending dollars. Okay, that doesn't exist. But guess what? You can do that synthetically by just keeping your savings in Bitcoin somewhere else and then keeping your day-to-day transactions in US dollars. And it starts to look like a synthetic credit card. You've just done it by moving your money into different places. And so, I think in a sense, the current structure of Bitcoin, a lot of critics want to say it failed because it's just savings mechanism. But I'd say no, that's, the Bitcoin community is basically synthetically creating a Bitcoin where it's got, Bitcoin rails for the savings, and then it's got fiat for the day-to-day small bits. I don't think that's necessarily something to fix. It's just that, if we're hoping to eventually capture that payment layer, then yes, we would need some kind of simpler way to use it. And rather than again fiddling with the sort of fundamentals of Bitcoin, I mean, I would prefer payment amounts are generally pretty small. The vast majority of money in existence in the world is saved in long-term savings. It is not in checking accounts. And so I would just as soon, go with some, for example, a Bitcoin-backed credit card or something like that, something that is certainly not philosophically Bitcoin-y, but, that kind of soaks up the transactional sort of payment demand where people want that to be in dollars, right? That's why Tether or USDC are so popular, right? This was a big issue in El Salvador as well, that a lot of people came back after a year and they said, wait, why is nobody using Bitcoin? And well, the answer is Bitcoin. It's not at the moment optimized for day-to-day transactions, and that's not necessarily a bad thing, right? People do that sort of synthetic Bitcoin blend. Um, so yeah, I mean, I just get nervous about fiddling with anything at the core of Bitcoin, anything that would increase concentration to simply chase that sort of last 5 or 10% of monetary demand that's made up of payments.
Yeah, and I certainly am not suggesting that we should change any kind of fundamental thing in Bitcoin. I think some of the proposals that have been made is like, for example, if you look at Strike, they basically provide the service by using the Lightning Network as payment rails with dollar or USDT sort of flipping of value on the edges. And since it's at the speed of light, your spread is very thin. It's very, very small, if any. So that would be like a layer 2 thing. I think the concerns is like, okay, well, what if it really works and suddenly we've got billions and billions of dollars. Let's say 70% of the Bitcoin volume ends up being dollar value moving over Lightning. So maybe what is that going to do to the Lightning Network? What is that going to do to the incentives to manipulate consensus on Bitcoin? I guess those are very technical questions. I don't, but I guess that's kind of just clarifying the issue there.
Right. Yeah, I would agree. And something like Strike, I think, is a great product. I think that over time, also Bitcoin volatility, it goes down just with wider usage. And if we consider, for example, that gold, right? So when gold was used as money, it was extraordinarily stable, famously. But since it's been demonetized in the 1970s, there have been periods where gold has doubled or dropped in half in a 2 or 3 year period. Now, that's not because gold has a problem, obviously. That's simply because when something is used as the common money, it is a deep enough market that it doesn't move that much, right? So, I think eventually, because a big part of what we're talking about is sort of cloaking with this fiat overlay, I think a big part of that is simply because Bitcoin is so volatile. If Bitcoin were no longer volatile, then I could see people using it like fiat, and they wouldn't need any sort of intermediary or layer on top of it. But I think that will happen, but that's a gradual thing. That kind of takes us back to the the age of average people. As Max Planck put it, it's a bit dark, but Max Planck put it: science advances funeral by funeral. And in a sense, Bitcoin advances funeral by funeral. It's hard for people who are older to get their head around Bitcoin. I think it's a lot easier for young people. So as that process continues, as time goes by, Bitcoin volatility comes down one by one. Certain people have different tolerance for volatility, right? So a college student might be able to accept 10% volatility in his money year by year. A elderly pensioner may only accept a 1% fluctuation. And so as Bitcoin volatility comes down just with more usage, then I could imagine sort of progressively more and more groups feeling that it is low enough volatility that they're willing to use it as a substitute for fiat. But obviously we're not there yet.
Yeah, there's this really interesting narrative dilemma within Bitcoin, and you see it. I think Jack Dorsey with Jack Mahler, they talked about it in their recent podcast, where there's this vision of Bitcoin as digital gold, and we just talked about why it kind of fits that. It's a very good way to hold your money safely because of the current infrastructure in Bitcoin, which has the best wallets and security in the world, and so you can hold great wealth very tightly for a long period of time if you do things right in Bitcoin, and so there's this kind of appeal to frame it as gold, and because it's not used as a as a unit of account, excuse me, then it's not as easy to spend it, right? You have to kind of jump through a couple of hoops. And so, but Jack Dorsey sort of pointed out, he said, well, I think that the adoption and making it easy to use as payments is actually fundamental to its value, which I also agree with. So we have to wrestle with this narrative of Bitcoin as digital gold, but we also have to continue to push it as currency. However, we have this dilemma, which is we're competing with the dollar, right? And El Salvador is just such a fantastic example of that, because despite being a small country that has, let's say, very strong leadership, pro Bitcoin leadership, that has and a government that has basically opened the doors to Bitcoin, we see Bitcoin adoption stall in the probably like single digits, maybe like low double digit sort of usage, if it's that, because it's competing with the dollar. I think if Bitcoin was competing with the Argentinian peso or the Colombian peso directly with that kind of open doors, I think we'd see something much different. But let's talk about El Salvador, because it's a great example. How do you see this playing out? I mean, first of all, do you have faith or confidence in Bukele? Do you think he'll get reelected? Do you think that the safety that is brought to the country will last? And do you see things changing maybe in the Bitcoin bull market, or what are your thoughts on El Salvador?
Yeah, that's an interesting question, because since Bukele did the dual legal tender, Bitcoin has more or less been in a winter. And so, if Bitcoin got back into a growth phase, then we could actually see quite a bit of uptake. Bukele himself, everything that I've seen about him says that he is enormously popular. I imagine that, El Salvador has been insecure for so long that I imagine what he's doing with the gangs is massively popular. I'm actually glad to hear that it's influencing other Latin American countries to copy that approach. So, I mean, I would be very surprised if he lost the election, assuming it's a fair election. But at the same time, of course, he's got a lot of enemies. He's got a lot of people who wanted him to fail, powerful people. So, it's hard to say what gets stirred up in El Salvador. But at the moment, I'm in the U.S., but from what I see from here, it seems that he's giving people what they've wanted for a very, very long time. I don't know that Bitcoin has necessarily helped him. I think certainly for the percent of Salvadorians who are into Bitcoin, it's been very exciting. But my guess is most Salvadorians have seen it more or less as, he's got this weird hobby he's into. Perhaps they worry about impact on Salvador's sovereign finances. But fundamentally, I do think that if Bitcoin, that's all been during this period of low prices of Bitcoin. So if Bitcoin does come roaring back, if the Salvadorian sovereign holdings turn a big profit, then I can imagine that the Salvadorian public will get excited about the Bitcoin move again.
Yeah, it's very tough to compete with the dollar. It seems to me like the dollar will have to weaken while Bitcoin strengthens, and then we're going to be able to see, what kind of adoption El Salvador can demonstrate in Bitcoin, and hopefully the startups there will be ready for it.
Yeah, I mean the dollar. If the dollar suddenly weakens substantially, like for example, if de-dollarization really takes off and all these dollars are being flushed back into the U.S. and so the price goes down significantly, let's say 20-30%, it would move people really all over the world into other assets. But at that point, the first question would be what's happening in the other countries, right? Because the closest substitute to a dollar is a euro or a yen or a Canadian dollar or something like that. Now, having said, most of the dysfunctions that are happening in the U.S. are also happening in the rest of the West, certainly not necessarily in Japan, but they are happening in the West. And so most of those other competing currencies would also, probably fall as well. So then at that point, yes, people would start looking at things like gold, Bitcoin. Gold, probably the most elegant way to use gold is a gold-backed credit card where the gold is stored somewhere with some custodian. You have a credit card, so you're spending dollars but you're backed by gold. That mimics sort of how most people use Bitcoin anyway. So if there is a catastrophic collapse in the dollar, if the other currencies also are collapsing as well, both of those being unlikely in the near term, then at that point people start looking at gold and Bitcoin, and there, the question is, what's our time frame? So if there's a great fiat collapse in the next 5 years, then I suspect the vast majority of people are going to go to gold. Again, just because of that age thing. Most people, they're not familiar with Bitcoin. The whole "is it real" thing makes people nervous. Even though the vast majority of gold value is monetary. In fact, I did a paper on this about a year ago. That if you isolate the jewelry demand for for gold, and the industrial demand for gold, it makes up, something like 3% of the value of gold. The rest of gold is a speculative bet that gold is going to become money again. So, really, gold and Bitcoin are almost identical across the board. Right? The fundamental value in Bitcoin is, yes, what it does for you today, but also it's a speculation that Bitcoin will someday be a common money. So, they're really economically essentially identical, but still, people get hung up on the physical thing. So if the fiat collapse comes in the next 5 years, I imagine most people would go to gold almost reflexively. If, on the other hand, fiat has another 20, 30 years to go, then by that point, most people alive will be relatively familiar with Bitcoin, and we may just skip the gold phase. Because I think sort of fundamentally on a technical basis, I think Bitcoin is obviously superior to gold. You don't need custody. It's not as vulnerable to government. The transaction costs on gold are astounding. Famously, when France decided to withdraw a bunch of gold from New York, they had to send an aircraft carrier. It literally costs millions of dollars to transport gold. This is something that you have to plan it 9 months ahead of time, and just in context of that, the $10 Bitcoin fee is nothing. So, I think fundamentally gold is not as good as Bitcoin, but what it does have is mind share at the moment, and I think over time Bitcoin gets better on that.
Yeah, that's super interesting. And especially with this story of the BRICS nations trying to establish a gold standard again, which I want to ask you about. But we have almost 200 people listening, which is fantastic, guys. And this show, we still got plenty of very interesting top content to cover. So please share the link and pump the show. And thank you so much for being here. I hope you're enjoying this conversation. I'm enjoying it greatly. I think it's very interesting, and yeah, there's so much to talk about. So yeah, what do you make of this? Do you think do you think they can pull it off? B, do you think a gold standard would look different this time around, or would it be fundamentally the same? Kind of big banks protecting big gold, and then just settling debts digitally, and then every once in a while an aircraft carrier moving some gold around. Um,
Yeah, the whole gold question with BRICS, I think, is fascinating. The way I like to frame it is that China has two approaches if it's trying to take down the dollar. There's the conventional approach and the nuclear approach. The conventional approach is what it's doing now. So I mentioned earlier, it was basically bribing countries into its anti-dollar block, and it does that with development aid, for example. It's got this development bank that, say, African countries can approach to get low-interest loans. But that process is very slow, right? That can take decades. And so the alternative approach is the nuclear one, where they create some sort of standalone BRICS currency. They wouldn't necessarily use the Chinese yuan because, of course, fiat currency that you can counterfeit is very useful to countries. So, China would like to have the yuan be very weak so it can outcompete in export. So I don't think that they would back the Chinese yuan, but it's possible, just as an out-of-the-box solution, that they could stand up a BRICS currency, back that with gold. Initially, nobody would believe it, right? Because the countries involved are not very trustworthy. Brazil is famously bad at money, which is part of the BRICS group. Russia has a lot of issues at the moment, including sanctions. China is not very trusted. So initially, people would laugh, but if they stood up a bank like that and endowed it with enough gold that people actually took their BRICS paper and traded it for gold, and by gum, the thing worked, people would start believing it. And if up till now, fiat has, especially over the past 50 years since Nixon, fiat has performed very badly, but it had the benefit that there weren't many other options. I mean, until Bitcoin existed, your only option to fiat was either put it in a security or in real estate or in gold, and all of those have enormous transaction costs. And so if you actually had a gold-backed BRICS, to me, that would be pretty fascinating. I think it would, not initially, but over the first couple of years, it would draw a lot of demand away from the dollar. I think that would massively accelerate de-dollarization, which is already going very fast, but I think that would really take it to the next level. And so, yeah, sorry, I have to go in probably I might get interrupted here. My daughter has issues. But anyway, so that would be fascinating. Now, if that were to occur in terms of how it would be structured, yeah, I suspect that, day to day, the sort of BRICS sponsored financial system, it would look identical to our current financial system. If we go back to the 1960s when we were still on the gold standard, at least for countries to get their gold, the banking system worked essentially the way it does now. The trick is that, because there was the obligation for central banks to pay out gold, there were constraints on how much countries felt comfortable inflating, right? So you would still probably have fractional reserve banks, but they would be more constrained, right? You would have central bankers who are trying to limit the issue of what would essentially be fiat currency, but it would be gold-backed fiat currency. They would try to limit that because they don't want the gold reserves to drain away. So, really, I think the banking system would fundamentally look the same. It would just have these guardrails over on the edge. And day to day, the way that people would experience that is just that, the system would look the same. You'd have a BRICS-based banking system, but it would simply have a lot lower inflation. In fact, if you go back to the era before the Federal Reserve, so for about 150 years in the US, we had essentially no inflation whatsoever. So I don't know if we'll get quite that good, but I can't imagine at least us getting back to the kind of inflations that we saw before 1970. So about half the rate that we've seen since then.
Right. Yeah. It certainly would be an improvement if the powers that be, if the spending, powers of government were somewhat limited by, again, a lack of confidence in fiat and a gold-backed system. That would certainly be better than today, and government might actually start to shrink and be a little bit responsible.
That's the hope.
Yeah.
Yeah, I was mentioning earlier
That's
how
the
much
hope.
regulation exploded, and regulation is really a barometer for how big government gets. You have the budgets, but much more important is the scope. Like, how many things is government trying to control? And that just absolutely exploded since the U.S. went off the last bits of the gold standard. WTF 1971 is a great site, and he basically catalogs all the ways the world just absolutely fell apart. It's amazing when you look at the charts. You have stuff where there's just this almost perfect inflection point on the Nixon shock where everything got worse. Divorce, incomes, just depression, every single thing on earth got worse. So it's really astounding. I think people underestimate what inflation does. It really breaks everything.
Let me ask you one final question then. CBDCs. Every country and their grandmother is talking about CBDC pilot projects. CBDCs give them more control over the money. They let them. It seems to me like they let them micromanage and defend themselves from bank runs. Because they can decide to shut off your ability to spend money on certain things, so they can basically close off the exit gates to banks, or they could do things like keep you from buying Bitcoin or gold, for that matter, in theory. Give us an overview of what you see in terms of CBDCs and how it might actually play out, because I think people are very scared, but I actually think it's going to be like any other shitcoin, essentially. Part of my language, it's just going to be a catastrophe, and hopefully it's going to be funny to watch, except for the disaster that it'll cause.
That's the spirit. Yeah, I mean, people hate CBDCs. Every time they ask in public opinion polls, it's something like 80 or 90% opposed. People hate the idea of replacing, say, the US dollar with a surveillance coin that can control you. But of course, governments love it because they want that surveillance, they want that control. The Fed has been floating what they call friction tech, which is the idea that if the bank's failing, they can lock you in. So they're absolutely interested in doing this. It's being pushed really all over the world, but including Washington. And in many ways, this continues kind of a 50-year process where governments have progressively turned the entire financial system into a surveillance and control panopticon. We saw this with Canada, with the truckers, 2 years ago now, where, really all of the functions that a CBDC would give you, right? The ability to stop people spending, to control what they spend on, all of these already exist, sadly. But the trick is that a CBDC makes them one heck of a lot easier. So it's just push button. You could use this to redistribute income. You could do a UBI with it, which I think they're certainly going to do when they try to introduce it, because that'll get enough votes. So I think it's guaranteed that countries are going to try to do it unless we fight hard. We are trying in Washington at Heritage. And then in terms of what happens to it, I think that once you have a CBDC, the dollar or fiat currency becomes a lot less attractive to people. It feels like there's a government agent looking over your shoulder. It also enables massive inflation because of that push button nature. So I think that they will try to impose CBDCs. CBDCs will end up backfiring and making fiat a lot less attractive to people. That then drives them either to the currencies that are not doing a CBDC, or it drives them towards that gold Bitcoin space. So in the long run, I'm optimistic, but like pretty much everything in the economy these days, I think that we've got a rough patch between now and then.
Yeah, that's really interesting. I certainly would be trying to sell the CBDC, but and buy whatever I can. But Peter, thank you so much for joining us. It's been a great conversation.
Yeah, of course. Thanks for having me on.
Awesome. Anytime. Thanks everybody for listening. This is the kind of conversation that I love having, talking to people at the edges of various industries and parts of society, be it academia or technology or culture. There's a lot more to come. We've got a bunch of interviews lined up. We've talked to Tone Vase. Peter Rousseau is coming on the show very soon. We have Svetsky, who's going to be talking about AI, and a ton of other interviews discussing various dimensions of life and, to some degree how Bitcoin affects that, but also just how to navigate the complexity of today's world. So I'm really enjoying these conversations. I hope you will join us on their live spaces that we host every week, usually either Friday, Saturday, or Sunday, depending on our guest availability. And then we eventually publish here at juangalt.com. So either way, stay tuned however you can, be it on Twitter at Juan S. Galt or at Bitcoin News COM Twitter handle, or here at juangalt.com. Just subscribe and you'll get a notification when the podcast is live. All right, thank you all and see you on the next one.